Hey guys, Mike here. So today in this video, I'm going to talk to you about probably one of the most popular IPOs that people have been waiting on for a while to come public. It's called the YouTube of gaming, and you know the gaming industry is booming right now, and so that's why everybody's so excited about this. Plus, it's coming direct listing, not traditional IPO, which gives us a much better chance of actually getting in at a reasonable price. Okay, and so I'm going to talk to you about the company, what they do. We're going to go over the financials. And then at the end, I'm going to talk to you about 2 red flags, which I found, which really concern me. And you know, on this channel, we don't sell stocks. We just tell the truth about the stocks, okay? And so you got to make up your mind whether or not you want to try to dive in on this next week or not, okay? So if you get anything out of this, and only if you get anything out of it, please hit that like, subscribe button. I really appreciate it. It helps with the YouTube algorithm and to grow this channel. And if you want to join the 99-cent membership, you hit the join button or the link in the description if you don't see that. And you can look at the perks and stuff like that. And I promise you, you get your 99 cents worth, okay? So without further ado, let's get into it. And we're talking about Roblox today, and it's set to go public through a direct listing. It's going to happen on March 10th. And so we don't know what the share price is going to be because in January, the company sold nearly 12 million shares of convertible preferred stock in a private placement at $45 a share. We're hoping it's somewhere in that neighborhood. We shall see. And one reason everybody's so excited about it, guys, is just because the overall gaming industry is, I think in 2019, is worth about $151 billion. It's supposed to grow with a compound annual growth rate of 12.9% from 2020 to 2027. So I mean, you can see the chart here. So it's just a massive and fast growing industry that people are really excited about.
If you don't have kids, you've probably never heard of one of this year's most anticipated stock market debuts. Today, more than half of the kids in America play something called Roblox. It's a social gaming platform that allows users to play, create games, and hang out with their friends all in one place. Roblox is now worth $29.5 billion, according to its latest fundraising round. That's up 7 times from its last round in February 2020, when it was valued at $4 billion. CEO Dave Baszucki's ultimate vision for Roblox is an online world where we can work, play, and entertain ourselves, or what's known as the metaverse.
A world where the limits of reality are your own imagination.
Yup, like the virtual universe in Ready Player One.
And if you've never seen their games, I mean, it's pretty much everything you can think of. It looks like little Lego men running around in action, adventure. You got sports. They got almost like virtual reality in there where you can like literally like live in a city, work at a pizza joint, go to high school, interact with your friends and stuff. It's a social media website as well. And so as you can see, one of the reasons people are so excited about this company, guys, is because of the market they're in, right? It's going to be a fast, huge growing market over the next 10 to 15 years, easy. And so for them, they really don't have any competition either, because other types of gaming, you know, Call of Duty and stuff like that, they have sophisticated people who they employ to make that content. Right? It costs a lot of money, research and development, things like that. Over here, Roblox has 345,000 content creators. They're just regular folks like me. I'm on YouTube creating content, right? So YouTube lets me have 55% of the ad revenue. They keep 45%. Roblox keeps 30% of the revenue, and the creator gets 70% of the revenue on their site. And so 150 million users in 2020 on there. And it's all kinds of different games. I mean, they have these virtual games like kids go to high school on there and interact with friends because it's a social media platform on top of that, right? And they got Roblox Studio, which you don't even need to know how to code or anything. I watched it, and you can literally go in there and just build your own game and stuff. I mean, there's people, one girl I ran across, she's made over $500,000. Now she employs 14 full-time people. I think she's like in her early 20s or something. I mean, she was a teenager, I think, when she started doing this. And so, you know, that's why people are excited about this one. And it really is kind of how they approach and everything. But, you know, obviously, like I said, we're going to go through the financials next, and then we're going to get into the red flags I talked about, okay? Taking a look at the financials, I mean, you're seeing they've grown the revenue quite consistently, and actually, you know, you're looking at a 56% jump from 2018 to 2019. Then they did a massive, like 82% jump from $508 million to $923 million in 2020. That is definitely COVID related. That's why it blew up so much. But at the same time, if you look at the expenses, this is what the problem's coming in for them. Because remember, they have over 345,000 creators that they have to pay out, right? They keep 30% of it. The creators get 70% of the revenues. And so this may have gone up 82%, the revenue that is, but look at the expenses as far as the developer exchange fees went from 111 million and tripled to 328 million. From 2018 to 2019, it barely moved up at all. But if you look at these expenses and how much they're increasing from 2019 to 2020, it's a greater percentage than the actual revenue actually increased, which is what is, contributing to this $257 million net loss down here. And then if we look at cash, they got plenty of cash on hand at the end of the year. They had $893 million, working capital $195 million, total assets $1.8 billion, total deferred revenue $1.5 billion. And then if we scroll down, and then look at free cash flow, they've done a good job of increasing this, because in 2018 it was 34 million. It dropped massively to 14 million in 2019, but then now it's around 411 million. And so the financials don't look bad at all. Obviously, they got plenty of cash on hand. They're growing revenues. You saw the big jump from 2019 to 2020. And when I see that big jump in a pandemic year, okay, and what do people do when they're stuck indoors? They rent a lot more movies and watch a lot more TV, and they play a lot more video games. So what's going to happen when we come out of this pandemic, supposedly? And so that's one of the concerns. So check this out. So here might be the first red flag, and this is the guidance for 2021, okay? First quarter looking good, okay? So they're going to have 37.6 million to 39.6 million active users, and that's about a 59 to 68% year-over-year growth. Revenue of 320 million to 335 million, representing a 98 to 107% year-over-year growth. But then if we scroll down here, the second quarter is what worries me. Look at this right here. All of a sudden, daily active users, we go from 37 to 39 million. Now we're dropping to 34 to 36 million, which is only representing a 3 to 9% growth. Hours engaged dropped by almost 11% year-over-year growth. And the revenue, it says it's 350 million to 372 million, representing a year-over-year growth of 75 to 86%. And so that all sounds good until you read this right here. And it says, we headed into 2020 with strong organic growth, which was further bolstered by social distancing restrictions. As those restrictions ease, we expect the rate of growth in 2021 will be well below the rates in 2020. However, we believe we will see absolute growth in most of our core metrics for the full year. We also expect that by expanding further into older age demographics and growing internationally in regions like Western Europe and East Asia, we will have significant opportunities to grow our business at higher rates again starting in 2022 and beyond. And then if we look at the full year 2021, they're expecting about a 6 to 12% increase on daily active users for the whole year. Hours engaged are going to drop anywhere from negative 3% to maybe a 3% positive. And then revenue is going to be around $1.4 billion to $1.5 billion, representing a 56 to 64% increase year over year. And I'll admit, I'm no mathematician, but I do got a couple degrees in business. I run restaurants, things like that, and real estate. And you're going to have to explain to me how you have, in the second quarter projections, 2 million less daily users, 1 million less hours on the platform, yet you're telling me you're growing your revenue even more than the first quarter. Like, you're projecting more revenue than you had in the first quarter. You had more users, more hours. Like, I don't understand how they're coming up with that. And if the second quarter was down, why would the third and fourth quarter be any better? Because as we go into this, well, guess what's going to happen? If schools open up in the fall, all the schools around the country, because as vaccinations increase, I think we vaccinate about 17% now in this country. As that increases, don't forget this is a global platform. You can play it anywhere, right? Kids are going to be in school more. They're going to be home doing more homework. They're going to be going to Disney or whatever. If the parks open up, if all that stuff happens, don't forget Texas just went 100%. Mississippi just went 100%. Other states are going to follow. I promise you, Florida. We never had a mask mandate. I can guarantee you Disneyland will be open soon, okay? Guaranteed it. And then if sports come open and more people are going to be able to go, they're going to start taking their kids with them. People are going to be vacationing. That's way less time on these platforms. So I'm kind of confused by how they're coming up with their numbers on that. But, you know, maybe you can figure it out. I cannot, but that's a big concern for me. And then here's my second concern. And then I found this good article saying what could go wrong with Roblox this year. And it really has to do with the majority of their users are under 13, right? And it's not like 13-year-olds or kids under 13 are going to be brand loyal, all right? They got a lot of things going on with school, plenty of choices, whether it be Nintendo, going to Legoland, you know, watching stuff on TV, Disney Plus, streaming. I mean, all kinds of stuff they can do besides this. And so also the access to distribution channels and contingent upon external partnerships, right? And so Roblox gained approval to operate in China through a joint venture with Tencent. This could be an enormous revenue opportunity, but it comes with uncertainty given the tense relations between the US and China. Apple and Google also have significant leverage over Roblox. For the 9 months of September 30th, 2020, 34% of the revenue was attributable to Robux sales through the App Store, and 18% of the revenue came from Google Play Store, which of course makes them very vulnerable to Apple and Google if they decide to change their fee structures or their data policy, especially when it comes to kids. Because I know YouTube costs creators a lot of money. Even before I got on this platform, I remember reading about it. They changed their policies on children. And even when I put these videos up, I got to click a box saying this is not meant for people under 18. And you get in a lot of trouble if it is. And you know, a lot of people, creators lost a lot of money. And so they're at the mercy of Apple and Google when it comes to this, because that's where the majority of their users seem to go on the platform with. And so that's a problem. The numbers, I don't see how their numbers add up at all. Even in their own, what they're telling you straight up is our growth rates are going to slow dramatically. Plus, there's kind of a double-edged sword here, right? It's a good time for them to IPO for us if we want to get into it, because I can't imagine it's going to be a massive run-up, because look what's happening to Skills and other gaming companies right now. They're getting hammered in this sell-off. And if that sell-off is continuing into next week, that should absolutely affect how they direct list, right? And so you'll be able to get it at a cheaper valuation if you think that's, you know, what you want to get into. But I'm just looking at looking at the year here going, whew, man, if we're opening up and the kids are playing less video games, stuff like that, and you're telling me your growth rate is going to be much, much less this year compared to last year, well, usually Wall Street does not, you know, respond well to that. And those earning calls are going to be pretty rough. And I just can't imagine the stock's going to, you know, accelerate up at a high rate at all, especially since, you know, what are people getting sold off for or upset about? Valuations, okay? And so, you know, that's just my 2 cents on it. I'm not sure what I'm going to do yet, to be totally honest with you. I got to see what they open up at. But that right there, you know, I want to at least show you that. You got to make your own decision. But that kind of scared me away from it. I was like, oof, I was really looking forward to this a lot. But when, I mean, they're honest. I appreciate the honesty. You know, them telling me their growth rate is going to slow, and it totally makes sense. But yeah, I still don't understand the math either. I don't get the second quarter, how you can have less users, less hours on the platform, and you're telling me you're going to make more money when you compare it to the first quarter. It makes no sense to me. I might be missing something, but if I run a restaurant and less people are coming in and less people are getting stuff off the menu, unless I'm raising the price dramatically, there's no way to make more money like that. And so, you know, want to get your thoughts on it. I know it's an exciting company. I know a lot of people are looking forward to it. I will make my decision next week. You know, I mean, if it's a good bargain, I might pick some up just for the heck of it. But if it runs up real high, I'm not going to bother. I'll just wait that one out right now, especially if the sell-off is continue to go on. Then I know it'll probably come on back down a little bit. So we'll see. But I hope you got something out of that, guys. You know, please hit the like, subscribe button if you did. I really appreciate all you guys' support. And I'll see you guys later.